Welcome back to Point Blank. And making the cut today is the AIA Woes, following the near collapse faced by its parent company, AIG.
And joining us in our living room to chat about it is Mr. Stanley Jeremiah, former president of Singapore Insurance Institute and vice president of Global Benefits for Convergys, as well as Mr. Alfred, Chia, the chief executive of SingCapital.
Yeah, both of you are experts who throw light onto the situation for us. A lot of cloudiness surrounding the whole issue. People queuing out AIA, trying to cash out their policies and all that. We were on the topic of whether people should be worried about future payouts and bonuses being cut. And you have shared your view. How about you?
I do think that there's a concern. There's no guarantees for the future. Much of it depends on the general market outlook and the general economy. We've had a situation before where almost all insurers have had to cut their bonus, for example, after the Asian currency crisis. So this kind of situation is not new. Okay. The insurance companies are not insulated from the general economy, and the returns that they get will be impacted by that. I think that more than AIA's internal situation will impact the bonus payouts and performance.
So at this stage, are there any insurance companies that have not made a cut in their payouts?
Well, I mean, of course, for us, we do an analysis of different insurance company. But to add on what Stanley have mentioned, I think it's insurance companies' responsibility to ensure that they invest the policyholders' funds prudently to be able to deliver the returns they have promised. I mean, of course, there are insurers like TMHs, okay, that for the past 20-30 years, they have not cut their bonus rates. Even for our local insurers like NTUC Income, even though they did a cut in, I think, end of 2002. But when the economy recovers, they reinstate back, I think, shortly in 2003, less than a year. So, I mean, we would like, I mean, insurers, they are big players, so they are managing our hard-earned monies. So they have to fulfill their obligations.
Talking about reinstatement, the AIA has issued a statement today saying that they have put into motion their policy conservation program. That for all those people who have, scurried to cash out their policies or surrendered their policies, whole life and endowment policies, between 15th to 19th of September, they can actually, without penalty,
and submission of evidence of insurance.
To reinstate these policies. So, these policies will be reinstated in full as if they've never been surrendered. So they are giving people the chance to, to retract their footsteps a bit, to take stock of the situation and look at, how AIA is functioning these couple of days after the AIG impact and decide for themselves.
After all, they have invested probably like a lifetime saving into these policies, and it would be really unwise to cash it out at this point in time before it matures, right?
That's right. Well, certainly it sent so many policyholders scrambling, but the internet also has been buzzing on the topic. Netizens have lots to say about this issue. So we've checked out the forums on Asia One and Stomp to find out what people are saying.
With anxiety still running high even after the $85 billion government bailout of AIG, the Dow Jones Industrial Average dropped more than 300 points in midday trading.
I'm expecting it to still be choppy. It's like banging on a big bell. It reverberates back and forth, and it's going to take some time for those reverberations of the last few days to play out and calm things back down. So I think we're going to see a lot of volatility, a lot of up and down movements.
According to analysts, the fear gripping the market reflects investors' concerns that
Okay.
So we can't play the web comments on the video, but you have seen some of the comments on the forum, right? So what's the buzz about so far?
Okay. Well, a lot of the buzz surrounding the whole issue is really investors' fears. In in AIA. People are just really reacting. Whether the main question is this herd mentality that when one person says, "Oh, I think I need to take out my policy. Maybe you should too," you know, and you know, one kopitiam uncle tells another kopitiam auntie.
And I've also seen some comments like, you know, they are not too concerned about their endowment policies or life policies, but more with like the CPF related investments that they have made with AIA. So why is that the case? Yeah. Stanley, what's your take?
Well, I guess with your CPF investments, it is your CPF, and your CPF is your retirement fund for most people. So you'll be especially careful about your CPF funds, and I guess, you know, anything that you have over and above that is over and above that. But I think the fear again is unfounded, because, you know, all the funds that you have invested from your CPF, these are investment products which are kept separate from AIA's own capital. So, you know, I think the concern is unfounded. Okay. I think whatever happens to their investment-linked policies and so on are just a reflection of the current economy and not about AIG Group in itself.
Okay. And would you say that when people are in a hurry to cash out all their money from these policies, it would actually aggravate the current financial health of AIA itself, because they don't have enough funds to invest in like good products?
It really shock their functionality as well.
Well, it's no different from a run on the bank. It's no different. Okay, if everybody wants their money now, you know, the financial institution has to start selling assets in order to pay them back the money, and they're selling assets in a falling market. So that's aggravating the market, and if the market knows that a financial institution is dumping assets on the market to get liquidity, it just makes it even worse. So that's the situation. I mean, we had this situation in the UK where the British government came out and said Northern Rock is fine, but people still queued up to take out their money.
Okay.
And so what's happening in Singapore is not different from, say, what happened in the UK. Okay? And you had the UK government backing it as well. So this is something that happens from time to time in economies, you know, and people, when there's a fear factor. But, you know, the one point I want to make is that terminating a policy early is always against the policyholder's interest. It's always against the policyholder's interest. You never gain out of this. And especially if you haven't had the policy for many years, like 5 or 6 or 7, which is not many in insurance terms, then there's a lot of embedded value that you're going to lose, because you'll never get back as much as the premiums you've paid, firstly. And the other thing that you have to remember is you're going to lose the cover. So you have, say, 100,000 critical illness cover. The moment you surrender the policy, you lose all that cover. Okay, if something happens to you tomorrow, you have no insurance. You know, you've got back your $5,000, but it's not going to help you because your $100,000 cover is gone. I think these are some things that people need to think about.
And if they were to switch immediately tomorrow to another cover, another insurance policy, chances are that their health may have deteriorated from the time they first bought the policy, and they would have to pay a higher premium anyway.
Yeah, well, you have to pay a higher premium because you're older. Okay?
Exactly.
So if you're 5 years older, you're going to end up paying the new rate of premium for the life of the policy.
So what are some of the other, you know, pros and cons that you can highlight for our viewers, you know, about, you know, whether they should cash in or not?
I mean, actually, back to your earlier points about the person's not able, health deteriorated.
okay.
Yeah, because that's actually very true. No? Because when you terminate a policy, it's not just monetary. I mean, if let's say you have been loaded, or you have not been in good health, and AIA has been able to give you the policies, by terminating, you may not be able to get coverage from any other insurer, even though you are willing to pay the premium. So then you basically lose the whole protections. Right? And sorry.
So that's a important thing to take note of, because even if your policy has broken even and you take back what you have put in, it's still, I mean, it's opportunity cost, right? It's a lot of it. Yeah, so people have to take that into consideration before they queue up and, you know, decide to terminate.
And some comments on the web also said that, you know, Asia is pretty much cushioned against the immediate impact of the subprime crisis and the Wall Street crisis that happens currently. But there are also analysts that say that, you know, looking at the emerging economy stock market at the moment, it seems like they are feeling the most acute impact of these crises. So what's your take on that? Do you agree more with the first one or the second one?
Well, I think a lot of people at one stage were saying that Asia economy may have been delinked from the US. But I mean, just look at internet. I mean, basically, we are a global economy. I don't think anyone can really insulate from each other.
Okay.
But of course, Asia being the growth region, okay, I believe Asia would be able to recover much faster.
Okay.
I mean,
Okay.
People here are, I mean, we are still basically developing and growing.
That's right.
Okay.
Well, we have to go for a break right now. We'll be back with more questions for our experts in our living room.